Welcome to China Insider. I'm David Zhang. Let's talk about how the collapse of the Silicon Valley Bank is dramatically impacting China's startup industry. While the case may have been taken as a bailout by the US Treasury and the US government, and in turn a temporary calm in the storm, the long-term effects on the Chinese economy is worth discussing. Bailouts it may be. There are just too much foreign deposits that American taxpayers will eventually have to take up for the burden. Large foreign deposits, actually, which include Chinese companies. And ultimately, why is SVB so interested in the Chinese market? Well, one of SVB's top selling points in China is how quickly it can actually give people money. In particular, SPD Silicon Valley Bank Co. Limited, which is a bank that was established in 2012 as a joint venture between Shanghai Pudong Development Bank and Silicon Valley Bank, hence SPD Silicon Valley Bank, each with a 50% shareholding with the goal of serving China's technology-based small and medium-sized enterprises. It actually has a balance sheet of about $3 billion US dollars, which is in assets and liabilities. Now, the key to note here is that banks in China are all tied to some form of political power, and Chinese government policies determine who actually gets to invest in China. Now, Silicon Valley Bank entered the Asian market in the 1990s and has been operating in China since 1999. Silicon Valley Bank's business in China grew rapidly with the growth of China's venture capital industry, which was in its infancy at the time that it entered China. Now, it turns out SVB has been bridging the startup gap between the US and China. When it comes to startups, SVB has several Chinese clients. These companies include Baji Shenzhou, Ziding Pharmaceutical, Tenshinbo Medicine, Kumbo Medical, Genting Shibao, Fubu Group, Huyao Technology, Shennuo Pharmaceutical, and Novartis Holdings. Now, these all sound like names of either pharmaceutical or biomedical and technology companies. Now, here we have to explain why China's sudden rise in the tech startup industry is so important. But the first thing is to know that nothing actually happens in China without a political policy change. For example, a few years ago, the CCP mandated that China's semiconductor industry must surpass the West. And once it was a policy to do so, literally thousands of firms started to pop up making semiconductors. Many even went from food processing business into semiconductor. Now, they even had a super semiconductor fund, like a specific bank for the purpose of funding these developments. This is, of course, now under investigation for corruption and graft scandals. People basically took money and bounced. Now, after several billions of dollars, the semiconductor industry in China did not actually advance enough, yet these firms made their share of profit from it. So what I'm trying to say is that the government actively promotes certain industries so that they can use for strategic values, well, they can literally carve out a path for them that grants special exemptions or even fundings. Now, when it comes to the current thing, biological technology is a key part of the Chinese Communist Party's strategic development. From human genetics to pharmaceutical research to even diseases and viral research like gain of function, all these are prioritized by the CCP. Now, these were also laid out in what is called the Made in China 2025 plan. In 2018, the tech bio industry saw a big favorite towards it coming from the CCP leadership. There were 10 key sectors for development under its Made in China 2025 industrial strategy. Biotech is one of them. Others being, of course, there's artificial intelligence, aerospace, and different sciences. Which seems to be why SVB has so many clients in China that are in the biotech industry. Now, if you are SVB, wouldn't you also be interested in, well, investing in China, where the state is actively sowing advantage onto a certain tech sector of the economy for the sake of their political advancement, and able to essentially control what is being researched and created in these firms? Of course, SVB funds startups, often holding money at the bank before bringing it onshore to mainland China. The run on SVB that happened over the weekend happened so quickly, with $42 billion leaving the bank's coffers on Thursday in the US. Now, by the time that decision makers in China saw what was happening on Friday morning, which was in local time, attempts to rescue their money were already in peril. According to BBC, a Chinese report, on March 15th, that past 20 years have seen a surge of internet technology companies and later biomedical companies with venture capital firms behind them, making Silicon Valley and China's related industries a success. But in these just years since China has changed, especially after COVID-19 started, the regulators have clamped down on the internet industry, making it super difficult to raise capital and go public. So looks like the future could be pretty bleak for the SVB adventure in China or its business. However, that's more policy inside China rather than the performance of SVB since last week. And one of the top dogs impacted by the Silicon Valley Bank scandal is actually Sequoia Capital China, which is headed by Neil Shen. Now, he's also a top investor in China. Now, it's one of the most active venture capital firms in China, which of course is tied to Sequoia Capital here in the US. And according to SEC reports, Sequoia China has about $2.3 billion in SVB investment, double that of Sequoia Capital. People say investment in SVB has been an effective way for money laundering from China to the US. However, we don't really have the evidence to tell you that is the case. But since the Chinese clients of often Chinese companies of Silicon Valley banks are actually listed companies, they all disclose their relationship with SVB. And most of them emphasized that the impact was relatively small, unlike, it seems like Sequoia Capital, and at least 13 of these companies are listed on the Hong Kong Stock Exchange. Which is interesting here is that the online system for opening an account at SVB actually allows you to use a Chinese mobile phone number for verification. And according to CNBC's source in China, he also once had tens of millions of US dollars at SVB. Of course, he's since moved most of the funds out, but he said that he still had more than $2,500,000 at SVB. Now, along with the backing of a mainstream venture capitalist, a startup could also open an account at SVB in China within a week, which is pretty important if you want to make an industry bigger. The man says, quote, mainstream traditional banks such as Standard Chartered, HSBC, Citi have strict compliance and it takes a long time to start a bank account with them, and it can take up to 3 to 6 months. But according to the source here at CNBC, which he also founded a fintech company and 2 other tech companies, he says that venture capitalists like working with SVB because the bank essentially allows the investors to see and approve how much the startups have been using their funds and how quickly it can get done. Now, having a bank account with SVB basically allowed China-based startups to tap funding from US-based investors. In other words, it's the bridge that we've been talking about. SVB in China, which is the second largest economy in the entire world, had provided Silicon Valley level access to startup funds that they otherwise would not get inside China. Again, remember, everything in China has to be done through the political cycle of things. And so the current economic trend in China, if it doesn't provide a ground for growth, you won't be successful. Now, as we've said, in the few years since COVID, the Chinese economy doesn't really provide too much wiggle room for economic growth outside of what the CCP views is appropriate for the moment. Despite the crash at SVB, it doesn't mean that startups in China will no longer be able to get funding internally, because China's push for biotech developments will likely continue. They are, however, searching for alternative risk-based investment sources, something that they could consider to be lower risk. In fact, I think the crash at SVB is justified by the Chinese regime as the fault of the US regulators and propagandized as incompetence of capitalism. So such drama was replayed played first in 2008. Well, of course, despite having very different nature between the Lehman Brothers and SVB, the CCP has been able to use that to tout the system that they see as super stable with no risk, right? China is a state-planned economy. Now, the idea of venture capitalism and the startups here in China could fundamentally change, but if a startup in China is one of those in the priority industry at least, they often will still get loans and grants, or even in some cases able to get access to the best amount of funding available, if that is what the state wants. All it depends on is Xi Jinping. Of course, he now hates unpredictable capital, which he says multiple times that security and uncontrolled expansion are financial risks. See, he wants to centrally plan the economy as much as it can. So any risk to the economy could actually go side or be swept to the side for him. Now, on March 1st, bankers in China are being told to rectify their mindsets, clean up their so-called hedonistic lifestyles, and stop copying Western ways. What it could mean is a reduction of risks and basically a more focus on the so-called traditional methods of investments into economic sectors that are stable over the risky startups. Now, the directives is a part of a 3,500-word commentary which started last week from the country's top anti-graft watchdog. And just basically the latest sign that President Xi Jinping is on a campaign to tighten the Communist Party's grip on the financial system, but there's still much more to go. As of the National People's Congress, which kicked off since last week, Xi is poised to further entrench control by reviving a powerful committee which will coordinate economic and financial policy, and then he's going to put the people closest to him to oversee the changes in the economic policy. Now, this comes on the heels of the sudden disappearance of one of China's top investment bankers. And it also follows the downfall of dozens of officials over the past 18 years in essentially what is a sweeping corruption crackdown in the financial sector. What Xi's trying to do seems to be fundamentally changing the way the Chinese environment operates when it comes to building a business. And Xi Jinping's reorganization of the financial sector, what once is defined as financial elites, may no longer actually exist. It kind of goes back to the point of making everybody equal, like what the communist system wants. Whether that's a good thing or bad thing, from the investment point of view, it's definitely not. Well, China will steadily reduce the number of high-risk institutions to help fend off what I said is the systemic financial risks, like reducing the number of higher-risk lending banks. Now, China's central bank and its officials want to see under 200 high-risk banks by 2025. Which also is the year that you're supposed to surpass the United States in these 10 critical sectors made in China 2025. But I think the nature of it is the less risks, the better for the CCP. Or the less capitalistic the economy is, the better for the CCP. They are not really into capitalism, if you can't tell. Now, with that being said, we don't know if the political policy would change that much, which means that right now, since the focus is on recovering the Chinese economy post-zero COVID, there must be a lot of definition changes, but at the same time, a lot of things have to actually work or be effective. And of course, if the government tells them to research space, thousands of startups will continue to pop up. If the government tells them to go research nuclear power, then thousands more will pop up. The Central Bank of China, in response to the collapse of SVB, will likely be tightening its regulations in both investments and startups, and it also seems to fit the narrative announced by the CCP. Now, what's interesting here as we conclude is that despite the problems prioritizing making sure that the depositors at SVB still can get their money, inside China, that's not the case. It's the complete opposite story. Last year, there was stories of depositors in local banks in one province, in Henan, that were unable to retrieve millions of dollars in deposits. So basically, these people send their money to the bank thinking that it's just going to sit there, and then when they tried to go withdraw it, they were told that they couldn't do it. Of course, we know that all the banks would use the fund once it's deposited to go invest in something, but the point is you're supposed to be guaranteed to be able to get your money back. Now, of course, they didn't provide any reasons that were satisfactory for the depositors, and there were big waves of protest. But at the end of the day, if we compare and contrast, at least SVB is able to guarantee depositors' safety, whereas in China's bank's case, they can't even guarantee people will get their money back. That's something that seems to be pretty bad. All right, anyways, the big picture here is that the Chinese economy is having a very negative outlook, and SVB has been impacting Chinese startups. So the future seems to be pushing toward a more less risky investment environment in China. And if that will work out, then that could push the country into a more centrally planned economy. And if it doesn't, well, nobody knows what's going to happen next. All right, that's it for today's China Insider on SVB and its China ties. I'm David Zhang. Hope you enjoyed the content. If you do, make sure to subscribe to our channel, like this video, and comment below what your thoughts are on the tie of SVB and China. All right, thanks for watching today. See you next time.